Good morning, everyone. My name is NURUL BINTI RAZI, and today I will give you a short brief about Snowman Logistic Limited. Snowman Logistic Limited is one of India's leading cold chain logistic companies, providing temperature-controlled warehousing and transportation service. Established in 1993 and renamed in 2011, we operate a network of over 30 cold storage facilities across key locations in India. Our service support industries such as food, dairy, seafood, and pharmaceutical, ensuring the safe movement in perishable goods across the country. That's all for me. Thank you.
Before we start, allow me to introduce the team members in Snowman Logistic Limited companies. The Board of Directors, Ms. Ammatul binti Ahmad SUKIMI, our Chief Executive Officer, Ms. IRDINA ATHIRAH binti HAMIRUL BAHRIN, the Chief Operating Officer, Ms. MIEZA NASUHA binti MUHAZZAR, Chief Financial Officer, Ms. NORUL ADIBAH binti Muhammad RAZI, the Strategic Head, Mr. Muhammad HAZIQ bin ISMAYUDIN, the Finance Officer, Ms. NORIHA SISWANTO binti ABDULLAH, Accountant, Ms. SHAHIDATUL HAWANIS binti SHAARI, the Stakeholder Manager, Ms. FASIHAH binti ROSLI, and lastly, our Internal Auditor, Ms. SOFIA binti NOOR HAYAZEE. Now let's begin our press conference.
Good day to everyone present. My name is IRDINA ATHIRAH binti HAMIRUL BAHRIN as the Chief Executive Officer of Snowman Logistics. I am honored to welcome you all and briefly speak of Snowman Logistics, a leading force in the cold chain and supply chain logistics industry. At Snowman, we are committed to delivering end-to-end supply chain management solutions, including transportation, warehousing, and value-added services that ensure efficiency, safety, and speed across every step of the process. We proudly serve a diverse range of sectors, from e-commerce and retail to manufacturing and pharmaceuticals, providing tailored logistic solutions that drive growth and operational excellence for our clients. We are strategically positioned across India with over 30 temperature-controlled warehouses in key urban and emerging regions, supporting critical sectors like food and pharmaceuticals in a rapidly growing market. What truly sets us apart is our advanced infrastructure. Our facilities are equipped with state-of-the-art warehousing technologies, and we operate a robust temperature-controlled transportation fleet, ensuring products reach their destinations in optimal condition every single time. Now that we've covered an overview of Snowman Logistics, let's take a moment to understand how we got here. It all started with a strategic vision, calculated risk-takings, and unwavering commitment to innovation in India's cold chain infrastructure. We begin with our foundation era in 1993, when Snowman was established as Snowman Frozen Foods Limited, initially focused on distributing marine products. At that time, we operated with just 4 cold storage locations across India. We were positioning ourselves not just for the market that existed, but also for the market that we knew was coming. Moving into the strategic growth phase between 2006 and 2011, we underwent a major transformation following our merger with Gateway Distriparks in 2006. This led to our rebranding as Snowman Logistics in 2011 and sparked significant infrastructure expansion nationwide, positioning us as a national player in temperature-controlled logistics. During this period, we systematically expanded our infrastructure footprint across India's most strategic commercial centers like Mumbai, Chennai, and Bengaluru. In 2014, we've reached another major milestone, the launch of our initial public offering, IPO. It was a strong success, and by then we had grown to operate over 370 refrigerated vehicles and 23 warehouses across the country. Fast forward to the present, Snowman now serves high-demand sectors such as pharmaceuticals, dairy and seafood, and also has diversified into e-commerce logistics, supporting urban food delivery networks, a move that reflects our adaptability in a rapidly evolving market. However, Despite the industry's high growth potential, the company has faced several operational and financial challenges that have affected its profitability and long-term sustainability. To explore these key issues in more detail, I'll now pass back.
Thank you. Hi, my name is ADIBAH RAZI, the Chief Financial Officer of Snowman Logistic. As part of the corporate management teams, I am here to provide clarity on the financial matters currently surrounding our organization. Let me begin by acknowledging the concern raised by the investor and stakeholder over the company's financial performance in recent years. Despite operating in a high-growth sector, India's cold chain logistics industry, Snowman has experienced inconsistent profitability, including multiple years of loss since our IPO in 2014. The key issue we face is misalignment between business growth and financial return. While we have expanded our warehousing network, invested in new technology and shifted from lease to owning our transport fleet, our revenue growth has not kept pace with the rising operational and capital costs. Furthermore, the adoption of Indian Accounting Standard 116, the new lease accounting standard, has significantly changed how we report expenses. Although this has increased our earnings before interest, depreciation, and amortization, it does not reflect improvement in real cash flow or profitability. Our depreciation and interest costs has also risen, further impacting the net income. Another area we take seriously, financial governance. We acknowledge past audit qualification relate to bad debt provisioning. These are being addressed through tighter control, more accurate forecasting, and better credit risk management. As CFO, I want to emphasize that our priority is restoring financial stability, optimizing asset utilization, and delivering long-term value to the shareholder. We are currently reviewing our cost structure, refining our capital allocation strategy, and exploring ways to better align operation with profitability goals. Thank you. Next.
Thank you, CFO Ms. Adibah. Good morning, everyone. My name is NORIHA, and I will be presenting as the finance representative for Snowman Logistic. Today, I will walk you through the key financial issues the company has faced between 2016 and 2021 and discuss how these issues has impacted the overall financial health and sustainability of their business. Let's start with revenue performance. Over a 5-year period, Snowman's revenue has remained flat at around 2,400 million rupees, despite being part of a fast-growing cold chain logistics industry. This lack of growth reflects weak strategy execution and missed opportunities. It also limits the company's ability to scale and improve margin over time. At the same time, we observe a steady increase in costs, especially depreciation, which rose from 304 million rupees to 419 million rupees. This indicates high capital investment in fixed assets, but without strong revenue returns. As a result, profit margin were compressed and operational efficiency became a concern. Snowman also report consistent net losses. In fact, the company recorded losses in 4 out of the last 5 years, with the largest being 149.9 million rupees in 2020. This recurring negative performance has a direct impact on investor confidence and limits internal reinvestment capacity. Another key issue is the company's rising debt levels. Between 2019 and 2021, total debt increased sharply from 587 million rupees to 2,102 million rupees. While the debt to equity ratio still appears reasonable at 0.49, this rapid rise in borrowings increases financial pressures and raises questions about long-term solvency. In addition, the implementation of IND AS 116, the new lease accounting standard, has affected how financial results are presented. On paper, expenses before interest, tax, depreciation and amortization increased by 135.8 million rupees due to the reclassification of lease expenses, but profit before tax actually declined by 84.9 million rupees. This means the company's true financial performance may be masked behind accounting adjustments. We also note poor asset utilizations, with an asset turnover ratio of just 0.36. Snowman is not effectively generating revenue from its investments. This is a red flag, especially for a capital-intensive business like Logistic, where asset efficiency is critical. Now, on a more positive note, the company's current ratio stands at 2.52. This indicates the Snowman is able to meet its short-term liabilities comfortably. However, liquidity alone does not guarantee long-term sustainability, especially if profitability and efficiency remain weak. To conclude, Snowman Logistics is clearly under financial stress, from stagnant revenues and rising costs to growing debt and underperforming assets. These issues, if not addressed, will continue to weaken the company's positions in a competitive industry. As the finance team, we believe these insights send a strong signal. Snowman must act decisively or risk deeper erosion of its financial foundation. That concludes my part of financial issues and their impact. Now, I will hand it over to our accounting representative to elaborate further of the company's accounting decisions and reporting matters. Thank you.
Thank you, NORIHA. Now allow me to address the core accounting decision made by Snowman Logistics Limited and explain the professional justification behind those decisions based on the relevant accounting standard. First, Snowman's accounting for lease. Prior to 2019, Snowman, like most companies, classified lease as operating lease and expensed them as incurred. However, with the adoption of INDAS 116, which mirror IFRS 16, Snowman was required to shift to a more accurate reflection of its leasing obligation. Under INDAS 116, lease must recognize a right of use asset, representing their right to use the lease asset over the lease term, and a lease liability, representing the obligation to make lease payment. Snowman correctly identified its relevant lease contract, covering lease warehouse, transportation vehicle, and other cold chain facilities, and capitalized this lease accordingly. As a result, Snowman's earning before interest, tax, depreciation, and amortization show an artificial increase because lease expenses were no longer classified under operating expense. However, profit before tax declined as depreciation on ROU asset and interest on lease liabilities were recognized separately. This treatment is accurate and compliant because it presents a more faithful representation of Snowman's financial obligation and asset usage right. It improves transparency for investors by exposing the hidden financial leverage associated with long-term leases. Moving on to revenue recognition. Snowman operates mainly in temperature control storage and logistics service. According to INDAS 115, revenue must be recognized when control of goods or service is transferred to the customer, not when cash is received or merely when the service contract is signed. Snowman's revenue policies align with this standard. Revenue from cold storage service is recognized as service rendered, and transportation revenue is recognized upon completion of delivery obligation. There was no evidence of premature or deferred revenue recognition. Snowman's accounting ensured that revenue figures faithfully represent the actual economic transaction, supporting reliability in their reported income streams. The next area concerns bad debt provisioning. Historically, Snowman faced audit qualification for delaying provision on outstanding receivable, particularly notes in 2009. Under the old Indian GAAP, companies recognized provision only when losses were incurred. However, with the adoption of INDAS 109, which reflect the expected credit loss model under IFRS 9, Snowman shift to a forward-looking provisioning method. Under ECL, provisioning must be based on historical credit loss expense, adjust for forward-looking information, and loss are recognized earlier, improving financial statement conservatism. Snowman's recent financial record demonstrate a consistent approach to provisioning. Provisions were made annually, and write-off and allowance adjustment were transparently disclosed. This demonstrates a clear compliance with the principle of prudence and faithful representation as required under ECL model. Another important aspect relates to impairment of asset. Under INDAS 36 or IFRS 36, companies must assess at each reporting date whether any indicators of impairment exist for asset. If impairment indicators are present, a detailed test must be performed, and any excess of carrying value over recoverable amount must be recognized as an impairment loss. Although Snowman did not formally report significant impairment loss, it undertook strategy under restructuring by reducing its fleet of vehicles from 501 to 261 units over a few years, and refocusing on its core warehouse operating instead of overextending into non-core transportation. This operational action implied that Snowman management recognized economic impairment and response accordingly, even if no formal accounting information were booked. Therefore, although no direct impairment expense were recorded, Snowman's asset management approach remained consistent with the spirit and objective of INDAS 36. Finally, with regard to risk disclosure, in compliance with INDAS 107, Snowman disclosed material financial risk in its annual reports, including credit risk associated with receivable, liquidity risk due to seasonal cash flow pattern, and market risk arising from economic fluctuation. The disclosure provides stakeholders with vital information about how Snowman identifies, measures, and manages this risk. In conclusion, despite operational challenge and a difficult market environment, Snowman Logistic Limited has largely adhered to applicable accounting standards. The decision record lease capitalization, revenue recognition, bad debt provisioning, asset impairment consideration, and risk disclosure have collectively resulted in a financial reporting framework that faithfully represents the company's financial reality, promotes transparency, and protects stakeholders' interests. That's all from me. Now let's hear about the risk management strategies from our Board of Directors, Ammatul.
Thank you, Shahidatul, for your explanation. Good morning, ladies and gentlemen. As a member of the Board of Directors, I would like to briefly share the key risk management strategies we have in place to support the stability and long-term growth of Snowman Logistic. First, we follow a proper risk management framework. This means we always assess and monitor important risks like financial, operational, or regulatory risks before they grow into bigger problems. The company has a formal policy to make sure we identify risks early and act on them. So it's not just about reacting, but about planning ahead. Second, we take compliance very seriously. Our operations follow international standards, ISO 22000 for food safety and ISO 14000 for environmental management. This helps us manage risks related to product safety, hygiene, and environmental impact. which are very important in the cold chain industry. And finally, we make sure our operations are running smoothly all the time. We have 24/7 monitoring system in place. Warehouse temperature and vehicle movements are always being tracked. If something goes wrong, like a temperature issue, our team is alert immediately. We also have backup power system, which reduce the risk of spoilage or delivery delays during the power cuts. So overall, our risk strategy is about being prepared, following international standards, and using technology to keep things under control all the time. Now, let's move on to the corrective action we have taken to improve our operation and reduce risk even further. To start with, we have upgraded our fleet tracking system. All our trucks are now equipped with GPS and sensors to track temperature and location in real time. This helps us protect the quality of our goods during transport, avoid delays, and reduce the chance of product loss. We also expanded our warehouse and truck capacity, but we did this carefully. Before investing, we reviewed the financial risk, insurance, and demand. We didn't just grow fast, but we also made sure our growth was sustainable and well managed. And lastly, we have introduced more value-added service, this including labeling, sorting, and pre-cooling. This allows us to offer more complete solutions to our clients while also reducing waste and improving efficiency. So instead of just focusing on storage and transport, we're now adding service that increase our revenue and reduce cost. In short, these corrective actions are not only fixing existing problems but also making our business stronger for the future. So next, I will pass to the Sophia to continue our discussion.
Okay, thank you to Ammatul as the board of director. My name is SOFIA IRDINA and my role is as an auditor. And I would like to talk about the recommendation of governance, financial and regulatory. The first one is governance. For the first recommendation is to strengthen board composition. The issue is poor crisis response and unclear leadership in decision making. For example, appoint independent non-executive director with expertise in finance, risk and crisis management. It is to improve oversight and reduce management dominance. The second one is diversify board skills to avoid groupthink and ensure balanced decision during crisis. The second one is to strengthen internal audit function. For the issue is financial mismanagement due to inadequate internal control. For the first one is empower the internal audit team to conduct real-time audit during crisis to monitor control effectiveness and also prevent fraud or mismanagement. The second one is increase audit committee oversight with more frequent reporting during and after crisis. The last one is improve transparency and stakeholder communication. The issue is lack of clear communication damage stakeholder trust. For the first one is establish regular communication channel during and after crisis to keep stakeholder informed. And the last one is require quarterly reporting to stakeholder on governance, risk and also corrective actions. Next is recommendation for regulatory. The first one is adherence to accounting standard, which is the INDAS 116 compliance. It is to comply with INDAS 116 list accounting standard. The second one is capitalize list and report liabilities accurately. The last one is manage depreciation and amortization effectively. The second recommendation for regulatory is tax compliance and provisioning. It is to ensure proper provisioning for bad debts and also liabilities, work with tax advisors to comply with Indian tax laws, and also regularly review and update tax provisions. The last recommendation for regulatory is environmental and sustainability compliance. It is to adopt energy efficient refrigeration systems. Next is transition to eco-friendly refrigerated transport. The last one is comply with environmental regulations on emissions. Last one is recommendation for financial. The first is establish a financial contingency fund. The issue is liquidity problem worsen crisis response capability. It is to allocate a portion of annual profit to a designated crisis reserve fund to ensure liquidity during emergency. The second one is strengthen financial monitoring and reporting. It is to invest in real-time financial reporting tools to monitor cash flow, expenses, and also liabilities for quicker management decisions. The third one is cash flow management optimization. It is to maintain healthy cash flow is crucial to ensure that Snowman can meet its short-term financial obligation, especially during times of crisis or economic downturn. The last one is strategic partnership for investment. Snowman could benefit from strategic partnership that provide both financial resources and market access. By securing investment from major partners, Snowman could also strengthen its capital base and expand operations more effectively. Thank you. That's all from me. And for the next one, I will pass to the COO, which is MIEZA.
Hello, I'm MIEZA NASUHA binti MUHAZZAR, CEO of Snowman Company. Now, I will proceed for operational and efficiency of the Snowman Company. First operational issue is fleet utilization and transportation efficiency. Our asset turnover ratio is only 0.36 times, this indicating poor use of existing asset, especially reefer truck. The company downsized its fleet from 501 to 261 vehicles, yet vehicle underutilization continues. Snowlink, our digital fleet aggregation platform, remain underused. The action that we suggest is enhance the Snowlink platform integration into dispatch and routing process. This and then introduce the real-time routing optimization tools to reduce the fuel and delivery time. Lease or contract underutilized vehicle to third party or partner. So this will increase the utilization rate of fleet and warehouse. Next is warehouse and capacity utilization. The issue is warehouse capacity has increased to 107,450 platelets, yet revenue has stagnated since 2016. Many facilities operate below optimal utilization, leading to waste space and high fixed costs. The action that we suggest is conduct a utilization audit of all warehouse and identify underperforming sites. Create bundle service package like storage plus repackaging sorting for higher margin. And explore sub-leasing part of unused warehouse space to smaller cold chain vendor. This will evaluating small warehouse and excess vehicle that are not contribute to revenue. Next is cost structure and operational expenses. The issue is rising depreciation, maintenance, and energy costs. Manual workflow will increase time and error. The action that we suggest is implement activity-based costing (ABC) across service to identify the high-cost operation. Automate inventory tracking, stock picking, and billing function in high-value warehouse. Use energy monitoring tools to reduce the utility cost in the temperature controller area. Next is service quality and delivery performance. The issue is delivery delays and mishandling of fragile product. No structured system to monitor on-time performance or product quality handling. The action that we suggest is launch an on-time delivery tracking dashboard across all transport operation. Set up warehouse level service quality audit every quarter, and introduce performance-based incentive for frontline staff, like based on delivery, accuracy, and energy use. If has the KPI that to achieve, the staff will work hard to achieve their KPI. Next is technology adoption in operation. The issue is Snowlink is underutilized and most warehouse operations still rely on semi-digital system. Real-time visibility of stock, vehicle status, and temperature is limited. The action that we suggest is accelerate the deployment of IoT sensor in reefer truck for temperature and GPS tracking. Upgrade all warehouse to use an integrated warehouse management system (WMS). Provide mandatory digital operation training for logistic team. This will enable the team to identify ways, improve the process flow, and reduce inefficiency in warehousing and distribution. Next, I will pass to HAZIQ, Strategy Head of Snowman Company.
Good morning, everyone. Thank you for joining us today. My name is Muhammad HAZIQ and I serve as a head of business strategy at Snowman Logistic. It's a privilege to talk out to all of you such a pivotal moment in our company journey. Today we are excited to share a bold and transformative direction for Snowman. One that draw inspiration from the global pioneer like Amazon and leverage our very own logistic innovation, Starlink. The challenge is India cold chain logistic industry is undergoing a massive change from farmer to fork and lab to patient. Customer now expect faster, smarter and more transparent logistic solution, especially for temperature sensitive goods. Amazon strategy particularly is relentless focus on a customer obsession, digital integration and end-to-end control has proven the logistic is no longer just a support function but is a core engine for business growth. At the Snowman, we believe the time has come to rethink our logistic model not as a service but as a platform. Today, we are launching Snowman 2.0, a business strategy that aims to build a digital-enabled, customer-centric and fully integrated cold chain ecosystem across India. This strategy built on a 3 key pillars. First, Snowlink platform expansion. Inspired by Amazon marketplace model, we will rapidly scale Snowlink to onboard over 500 independent refrigerated transporter by 2026. This partner will gain access to our national cold chain network and real-time demand, while our customer will benefit from the faster deliveries, increased coverage and a lower cost. Second, predictive and intelligent logistics. By using AI and machine learning, similar to what Amazon used to in the warehouse, we will implement a predictive inventory placement and a dynamic route planning. This will ensure the perishable goods and are closer to customer even before they are ordered. Pillar is a rural and tier 2 cold chain reach. Snowlink type powered the aggregation model will help us break into the previous unreachable rural and a tier 2 market, fulfilling a critical gap between India healthcare, agriculture and FMCG supply chains. Our goal is to bring cold chain delivery within 24 hours to 80% of the India postal code by 2027. We also in the discussion to the pilot direct partner with an e-commerce platform, pharma manufacturing and a fresh produce aggregator, enabling them to plug into our logistic backbone just like a seller plug into Amazon's ecosystem. And we are not stopped at the transport. Snowlink will evolve it to offer temperature monitoring, automate documentation and a predictive alert, ensuring unmatched reliability in our deliveries. At Snowman, we believe logistics should be no longer a barrier, it should be a bridge between farmer and the market, bridge between laboratory and the patient, and between the business and their customer. Snowman 2.0 powered by Starlink is our commitment to build the bridge faster, smarter and stronger than ever before. Thank you and we welcome your question.
Thank you, HAZIQ. My name is NOOR. It is my privilege to speak as the stakeholder manager of Snowman Logistic Company. Today, I want to talk about stakeholder interest, power and influence. I want to share how we view our stakeholders, which are not just as part of our business but as the foundation of everything we stand for. First, customers. The interest expect reliable, timely and secure cold chain logistics solutions that preserve product quality, whether pharmaceuticals, food and perishables. They also value transparency and real-time tracking powered by modern technology. The power is high, which is through their purchasing decision and feedback. The influence is customer drive business growth, their preference shape service innovation and their satisfaction directly impacts our reputation, revenue, and long-term client relationships. Then, employees. The interest is seek a safe, inclusive workplace with opportunities for career development, fair compensation, and recognition for their efforts. They also value a culture of respect and purpose. The power is medium, which is influence operational efficiency and company reputation. The influence as frontline operators. Employees influence daily performance, customer experience, and operational efficiency. They are the company's ambassadors, shaping internal culture and external brand image. Third, investor. The interest aspect, sustainable growth, healthy returns, and responsible governance practice. They are interested in strategy planning, ESG performance, and financial transparency. The power is high, which is control over major decision, strategic direction, and financial backing. The influence investor guide major corporate decision and influence the business direction through financial support, board governance, and long-term expectation. Their confidence is vital for expansion and innovation. Then, business partners. The interest of business partners expects fair contract, timely payments, long-term relationships, and collaborative planning. They value mutual success, trust, and operational clarity. The power is medium, which is their reliability affects Snowman service quality. The influence, which is they are critical to supply chain performance. Strong partnerships enhance reliability, innovation, and scalability. Their success directly influences service continuity and customer satisfaction. Then, the governments. The interest of governments expect full compliance with legal, industrial, health, and safety regulation. They also look for corporate contribution to national goals, economic development, and environmental sustainability. The power is high, which can enforce legal action, penalties, or operational restriction. Then they influence the whole high regulatory power. Their policies influence our operations, licensing, infrastructure, sustainability compliance, and industry standard. Collaboration with regulators ensure risk mitigation and ethical practice. Then, the communities. The interest of communities is want companies to create job opportunities, support education and social programs, and protect the local environment. They seek share value and inclusive growth. The power is medium, which can impact the company reputation through public opinion or social media. They influence communities shape our social license to operate. They support influence, project success, public perception, and long-term social impact. Strong community relations foster trust, stability, and goodwill. Then, the media and the general public. The interest of media and general public expect transparency, ethical behavior, and corporate responsibility. They are interested in how the company treats people, protect the environment, and contributes to society. The power is medium, which is ability to shape public perception and trust. The influence of media and public opinion can influence brand image and trust. They hold companies accountable and spotlight both achievement and shortcomings. A positive public reputation attracts talent, customers, and investor confidence.
Thank you all. That concludes our press conference. If you have any questions, please feel free to leave them in the comment section below. Now, let us proceed to the discussion of the pre-submitted questions.
For Snowman financial performance can be divided into two distinct phases. First is initial phase from 2014 until 2015. The revenue increased from the 1,500 million rupee to 2,200 million rupee, and profit after tax 200 million rupee and 205 million rupee. Then we go to second phase is stagnant and decline from 2016 to 2022. The revenue stagnant around 2,400 million rupee by 2021 and lost in 4 of 5 years post 2016. The share price fell below IPO price is 47 rupee and 44 rupee in 2020 and 46 rupee in 2021. The profit after tax 149 million in 2022 and negative 0.4 million in 2021. The reason for the recent poor performance is highly competitive and fragmented industry. The cold storage industry in India is fragmented over 3,000 players, and despite industry growth project, the Snowman struggled to capture a significant share market. Number 2 is the increased cost and low revenue growth. The operating expense and depreciation steady rose while the revenue is stagnant. The depreciation increased from 304 million in 2016 to the 490 million rupee in 2021, pressuring profit. Number 3, heavily capital investment and debt. Total asset grew significantly post IPO, 3.8 billion in 2016 to 6.7 million in 2021, but it limited return on the capital. Debt surged dramatically in 2020 from 550 million in 2019 to the 1,722 million in 2020, increasing financial risk. Lastly, ineffective strategy shift. Snowman changed its model post 2016, focused only on temperature control housing and reducing its reefer vehicle fleet from 501 to 261 in 2021. Despite the strategy focus, the new business model did not yield the anticipated gain in the profitability.
Next, I will be presenting a comparison of Snowman Logistic financial performance with other logistics such as Mahindra Logistics, All Cargo Logistics, TCI and VRL using the raw numbers in Exhibit 5 of the case study and the standard ratio formulas shown on the slide. First, profitability. Using the formula net profit margin, Snowman's margin for 2021 is only 0.04%. In contrast, other logistics recorded significantly better margins, with TCI leading at 5.25% and others ranging between 0.9% to 2.5%. Next, we assess efficiency through asset turnover. Snowman's turnover ratio is just 0.36, which means its assets are underutilized. Meanwhile, Mahindra achieved 1.94 and other logistics were above 1.4, indicating far more efficient operations. As for leverage, we calculate debt to equity. Snowman stands at 0.53, while other like TCI and Mahindra were lower at 0.25 and 0.47 respectively. The case study notes that Snowman's debt increased sharply in 2020 without corresponding growth in revenue, a sign of rising financial strain. This number back the narrative in the financial performance of the case. Stagnant revenue since 2016, rising depreciation, losses in 4 out of 5 years, and growing debt despite flat performance. Our group report reinforces this, highlighting weak asset utilization and margin erosion. Collectively, these indicators show that Snowman significantly lags behind other logistics in profitability, operational efficiency, and financial resilience. To remain competitive, Snowman must improve cost discipline, increase asset productivity, and expand scalable, high-margin services such as dedicated warehousing and its now-linked digital logistic platforms.
Next is question 3. Analyze the industry in which Snowman operates, discuss the company's business model, and comment on its strategies. For the answer is, for the first one is industry analysis, which is cold chain logistics. For the market size, which is India's cold chain logistics, is $4.7 billion and growing at 17% per year. For the growth drivers, it is demand for processed food, pharmaceuticals, and nutraceuticals. For the challenges, it is fragmented during industry, that lack of infrastructure, which is cold storage and trucks. For the opportunities, which is expanding into smaller cities and meeting rising demand for the temperature-sensitive logistics. For the Snowman's business model, the first one is services. It offers cold storage, transportation, and value-added services like sorting, labeling, and also packing. For the second one, which is revenue, it earns from storage fees, transport, and also additional services. The last one is fleet, which is combines owned and leased refrigerated trucks. The last one is Snowman strategies. The first is expand into smaller city, which is targeting smaller cities like Bhabaneswar is with rising demand. The second one is offer value-added services, which is custom solutions for clients, increasing profit margins. The third one is own more trucks, which is that can reduce long-term costs and also increase margins by shifting from leased to owned fleet. Fourth is partner with Amazon, which is warehousing and logistic services for Amazon with minimal investment. The last one is develop Snowlink, which is a platform to connect with other fleet owners, which is can expanding capacity without new trucks.
Next is question 4. Based on the information provided, is there reason to believe that Snowman may have indulged in income smoothing? The income smoothing refers to accounting practice where a company shifts income or expense between periods to make profit look more stable and less volatile. This is important because it can mislead investors and hide the true financial health of a company. First is audit qualification and delay provisioning. The first red flag comes from a past audit qualification. In 2009, Snowman had an outstanding provision of 5.25 million rupee related to its fruit and vegetable supply chain project. Instead of recording the entire amount in that year, they only recognized 1.32 million rupee in 2009 and delayed the remaining 3.93 million rupee to the next year. This kind of delay is inflate their profit in 2009 and is a classic sign of income smoothing where losses are shifted to future year to make result look better. Next is fluctuation in provision of bad debt in Exhibit 4. The second issue is their inconsistent provisioning for bad debt from 2015 to 2021. For example, in 2016 until 2017, they suddenly made a large provision of 86.9 million rupee. Then in 2018 to 2019, they wrote up 128.2 million rupee. This sudden change does not match the trend in revenue or market condition. It appears that Snowman may recognizing or delaying losses depending on the financial performance of the year, a common tactic used to smooth the income. Next is use of IND-AS 116 to manage the perception. IND-AS 116 leasing accounting. The third point related to the adoption of IND-AS 116 in 2019, which changed how lease contracts are reported. After this change, Snowman's EBITDA increased by 135.8 million rupee, which sound positive, but their profit before tax actually decreased by 84.9 million rupee to due higher depreciation and interest expenses. Although the change was required, the management highlighted the EBITDA growth more than the drop in profit. This kind of selective reporting can mislead investors and is also another subtle form of income smoothing. Next is stable revenue but volatile profit. Between 2016 and 2021, Snowman's revenue remained relatively stable between 1.9 million rupee and 2.4 billion rupee. However, they reported losses in 4 out of 5 years. This is unusual, especially since revenue was not falling. It suggests that the losses were being driven more by internal cost adjustment and accounting estimate than actual business downturn. For example, depreciation increased significantly when revenue did not grow, which could be tied to asset revaluation or accounting strategy. Next is business strategy shift and write-off pattern. Snowman also made major change in its business strategy. After the IPO, they shifted from leasing reefer trucks to owning them, and later reduced the number of vehicles significantly. This shift affects the capital expenditure and depreciation, which are areas where companies have flexibility in accounting treatment. That flexibility can be used to time expenses in a way that make earnings appear more stable. In conclusion, the evidence suggests that Snowman Logistic may have engaged in income smoothing. Next, I will pass to IRDINA to answer the question 5.
To answer question 5, how would the adoption of new leasing standards impact Snowman's profitability? What would be the impact on its profitability, leverage, and efficiency ratios? If we dive further into this matter, the adoption of India Accounting Standards 116 in 2019 had fundamentally transformed how Snowman Logistics reported its extensive lease arrangements for warehouses and refrigerated vehicles. This new accounting standard eliminated off-balance sheet treatment of leases, requiring companies to recognize right-of-use assets and lease liabilities on their balance sheets. This new accounting standard had a complex and mixed impact on Snowman's profitability, with some positive and some negative effects. Under the profitability ratio, we see that EBITDA improved by 2.1%, that is 135.8 million rupee, due to lease expense reclassification. However, there is a decline in both operating margin and net profit margin, which suggests underlying operational challenges that accounting changes cannot hide. Moving to leverage ratios, we see dramatic change in the debt to equity and the debt to assets ratios, which significantly worsened as leases became capitalized as debt on the balance sheet and the total debt increases. The company's ability to meet interest obligations also have weakened as interest expense increases from 103 million rupee to 171 million rupee. Moreover, the decline shown in asset turnover indicates that Snowman is generating less revenue per rupee of assets, as the assets are growing faster than the revenue that they are making. The fixed asset turnover decline shows that the deteriorating efficiency in utilizing Snowman's fixed assets. The bottom line is that while India Accounting Standards 116 made operational metrics appear better, it revealed the underlying financial weaknesses and significantly worsened the balance sheet health. This also disclosed that the company's heavy dependence on leased assets without generating returns. So the standard transformation amplified existing problems rather than create new ones, forcing stakeholders to confront the reality of Snowman's capital intensity and poor asset utilization.